Welcome. My name is Len Lane, and I am the founder and president of Brokers for Life, Inc., and we are Dominion Lending Centers in Western Canada. The topic of our podcast will be about what we consider to be real-life mortgage solutions. Welcome back. Our special guest today is a gentleman who is an icon in the mortgage industry in Alberta. He has a very long history of working for several of the banks in the industry, especially with Royal Bank, which is where we met. He was a mortgage specialist, and I was a lowly home builder's manager in a show home in north side of Edmonton, probably. It's been a long time. And he has a background in not only being a mortgage specialist, but being a sales manager, as well as a licensed realtor at one time as well. So very well versed in the real estate industry in Edmonton, to the point of one point actually being the president of the Edmonton Home Builders Association. I can't remember what it was called in those days, but
it was called the Greater Edmonton Home Builder Association.
GEBA, yes.
GEBA.
GEBA. Anyways, my special guest today is Ray Meredith, and now a full-time mortgage broker with Brokers for Life. Welcome.
Thank you.
Because you have such a background in the banking side, I thought you'd be the perfect person to kind of maybe discuss with what you've seen as the differences between the two sides of the industry. Your knowledge, of course, of how the mortgage specialists work and now somewhat of how the mortgage brokers work is a chance for us to maybe do some comparison. So what's the blaring difference that you see between the two types of employment, I guess, if you want to call it?
There's actually quite a few. I would say probably the first is the option for a variety of different products as a mortgage broker versus working for just one lender. While that, I've always been a big believer that your strongest skill set is also your biggest Achilles heel. So while we may have a ton of options to find lenders, it can get a little confusing to understand what everybody's nuances are. You kind of get yourself down to probably 3 or 4, maybe 5 lenders that you get comfortable with. You get to know their products, the benefits of each of their products, and then you kind of stick to those. And obviously, you're going to have one-offs for private lending and things of that nature. That would be probably the biggest one. The second one, I would say, is the fact that you're an independent contractor, that you are self-employed. And while you do have you as the broker on record for where we are, and we have to answer to RECA, bottom line is the business is ours to run how we see fit, provided that we are, of course, following the rules. I think the feeling of freedom, I don't remember ever feeling as in control of my own career as I do now. Even when I was at the bank, as you know, I've worked for them all. So it's, pretty much. No, I have. And ATB too. So the bottom line is it's a very much an independent small business world that we live in. And you need to treat this like it is your business, not like it's a job.
And that's one point I've always made to people. It's like, yes, we have a brokerage, but really what we have is a aggregation of 28 small businesses, right? Everybody is running their own business to the best of their ability, and it's up to you what you put into it, and that's what you get back out of this industry, right?
Oh, absolutely. It's similarities in the roles would be you get out what you put in, like you just said. Very, very true. And I mean, it's like if you don't succeed in this business, it's through nobody's fault but your own, in my own humble opinion, because you're the one that needs to motivate yourself. You're the one that needs to go out and be in front of people all the time. You as a broker are the one that controls how busy or not busy that you are. So to me, if you're not successful in this industry, it's because you're not doing those simple, small things, which is being in front of somebody pretty much every day.
Yeah, and that doesn't change, right? It doesn't, like I've literally sold everything from nuts and bolts to houses. And it is that same thing. If you don't see anybody in your show home for a week at a time, you better go figure out a way to get somebody into your show home, because everybody always jokes about my analogy about the making popcorn, right? That the more kernels in the pot, and the more popcorn you got to make out of it. So what do you think was one of the easiest things for you to grasp on the broker side?
The easiest thing was just the ability to connect with the different BDMs at the different lenders. I would say that's probably the first thing that you should do is get to know them, because a BDM will make or break the difference if you have issues with the file in dealing with them. I've had encounters where some BDMs are more responsive than others. And you know what? That dictates where my business goes too, because I am I'm like anybody else. If you're really good with your clients and you're constantly in contact with them, they're more than likely going to refer you business. And I look at the same viewpoint with BDMs, that if they are not as engaged with you as you are with your clients, then maybe you should find a different lender. That to me is probably the easiest thing that I found out very quickly. The other part is it's very easy to get yourself all confused by the amount of information out there as well. It's like drinking from a fire hose, as I used to say to my new people I hired as a mortgage specialist, and it really is. You just have to kind of sit back and just kind of take your time, and it does take time. I mean, I've been at it now a year, and there's way more to learn for me.
Yeah, and that's part of the training that we do as well. We really try to start people off with just 5 lenders because there are 20, yes, no question. And a lot of them are cookie cutter. They all do the same things, but like you said, they all have their little nuances. What do they do better? Are they better with self-employed, or are they better with rentals, or just private sales? We have several lenders that I just tell everybody, don't send them a private sale because it goes into a whole nother queue and it'll take weeks to get done, right? So you probably realize that I really don't hold sales meetings per se. We have training sessions. So how much of a difference is there, do you think, I know I know there's a lot of difference in the amount of paperwork and reporting that you have to do as a broker as opposed to working for one of the big 5?
I would agree with that. I think our documentation out here is far more, there's a lot more of it, I would say. I also feel, and that's not to say that the banks do less of a job. It's just that out here, because I think you're personally liable for everything that you do, documentation is extremely, extremely important, that it's done in a timely fashion and it's done in an organized fashion, and you have an idea what you're doing, because you make a mistake out here, you can be liable for it.
True enough. Yeah, very, very important that, reviewing of document is a priority, so we know exactly what we're sending to a lender. There's no question that definitely has to be considered, especially given that one works, of course, under the Bank Act, and there's probably a lot more leniency as far as coverage, I guess. And, still responsible for the same amount of paperwork, just to the depth that we go into making sure that we have things right before we send them to a lender, right? So
very true, very true.
Yeah.
I will say that one of my difficulties is this difference between insured and insurable. And the reason why it's difficult for me is because with banks, you don't have to worry about the difference. Plus, the last time I did mortgages full time, there was no difference between rental properties, regular purchases, and now we have a whole plethora of different rates depending on the products that you're dealing with, be it rental, non-rental, and also the different rates depending on your financing, whether you're financing 65% or 80% or 95%. So that probably is still the biggest issue I have, is just getting my head wrapped around those different rates. And that's because we're dealing with monoline lenders, which is why
Right.
the insurable, which I get all that, but it's just a matter of just kind of keeping that top of mind.
Yeah, it's definitely an area that the banks, Scotia in particular, that we deal with, that has an advantage in that area, right? The only rate change they have really is that 30-year amortization. Other than that, it's just a mortgage, right?
Yeah.
And when you're working off of your own book of business, and that is the difference, I think, right? Learning what's insured, insurable, and uninsured took me quite a while. I probably lost 20 deals in that first 6 months because I'm going like, oh, that sounds like it's this, and turns out no, that was insurable. You just you had to get your head wrapped around that the qualifying rate was what was making the difference, right? So you've worked in a lot of different areas of the bank, not just as a mortgage specialist. How does the technology different between the big 5 banks that you've worked for and what we're using today?
I would say the first biggest difference is our CRM. the fact that any bank really does not have a CRM to speak of. So there's nothing about reaching out to clients on a regular basis. Like, you just can't do it. So I would say the technology that we have out here in the field compared to banks, second to none, absolutely second to none. And for me, that's probably the biggest factor that can help your business, because ideally, when I was coaching mortgage specialists in the bank, I would always indicate, hey, your client is your next piece of pie. So make sure you continually constantly keep in touch with them. But when you're in the bank, they don't really have any CRM to be able to kind of drip on the client on a regular basis. So you have to set up your own.
Right.
So I would say that's probably the largest difference from a software standpoint. I mean, each of the banks use their own product specific kind of thing. Once you get used to Velocity that we use, I think Velocity is a terrific program. I still find the CRM a little cumbersome to use, and always have difficulty every month sending out my newsletter. But I eventually get around to getting it done. But the programs that they do set up for you are phenomenal. Absolutely phenomenal. For birthdays, anniversaries, renewals coming up in 4 to 6 months, annual. It's just, to me, the software is just night and day better in our world than it is in bank world.
Yeah, there's no question, and I think the bank was kind of the same mindset as the new home industry, right? Where our good friend Ray, rest his soul, he would always tell me that I was only as good as my next deal, right? So, and so you're back out hunting 600 or 700 clients of my own in that CRM program. My phone's gone crazy, so I actually may have to shut it down a little bit just to try and keep up with everything and everything else that I'm doing. So that's great. MPP, mortgage protection plan, one of the best coverages as far as I'm concerned. And I've looked at 3 others, and we've always ended up back with MPP. How does that compare with the life insurance offering that the banks have?
Well, first off, they pay us better. I will say that.
Oh, yeah, no question. 8 times premium, and after 90 days and no clawbacks, it's pretty hard to beat. Yeah.
Yep. Pretty hard to beat. I find the MPP process, and I like the fact that it's built into Velocity as well. I think that's very handy. The fact that Manulife typically, I don't know if they even quote it or not, but I'm pretty sure they've got like about a 97% payout on any claims that are made, or it's definitely above 90% for sure, which leads me to believe that, like most lenders, the product-specific insurance is actually a very vital part. From my perspective, I wish it was integrated a little bit better into the system for calculating payments for clients, because that way you can introduce it earlier in the conversation versus now you kind of got to wait a little bit. But to me, you're doing your client a disservice by not having a good in-depth discussion on what kind of insurance they have, because to me, product-specific insurance is no different than, say, your investment portfolio that you have, many different types of investments. I think insurance is no different. You need product-specific insurance. I think you need outside types of insurance. Most people have insurance through work, but I still am a firm believer that even if you do have, benefits through work, I still think outside insurance is important, because it's a group insurance through your work. And if you ever leave your work and something happens with your health, then you're kind of screwing yourself by trying to get outside insurance. So if you have outside insurance, and I've had it all my life, besides all the group benefits, I think it's an excellent thing, because the disability, especially, not so much the life, because to me, the disability is the most misunderstood insurance product out there. And most people, if you ask them, every single sales meeting I ever had as a sales manager with my team of people, when I sat down with them and said, okay, you guys are bankers, you work at a bank, what's our disability policy? And I can guarantee you 99% of them could not answer that question. So most clients are no different. So that's why if you start and have a discussion around disability, you get very little pushback.
Yeah, and younger guys are always invincible, but I have had more phone calls over the years from I flipped my Skidoo. Long story there. My quad went over backwards, broke my hip. I'm 26 years old. I'm out of work for the next 6 months, maybe longer, right? So it is, and it's inexpensive when they're young, and that's always the crazy part, that something that they don't pay attention to. And the other part, of course, with MPP is that they underwrite everything up front. It's not at the time of when you need to claim. I think that's why the payout is so high. that they've already done that part for us, so that the client is covered right from the start. So, what do you think the mortgage broker world could do better?
What could we do better? That's actually a really tough question. I mean, we've got our regulators, we've got different associations attached to it. I believe personally that if you're gonna, it's kind of like me being involved in the Home Builder Association. You alluded to earlier that I'm a past president. And at the time, I decided I was making a living from that industry, so I decided to volunteer in it. And that's kind of why I got involved, because I believed in kind of giving back to an industry that I'm making a living from. And I still think that that's not a bad thing to do in our world either, be it get involved with that. But as far as getting things better, well, we could improve the course. I will say that. The mortgage broker course is the worst course I've ever taken in my life. And since AMBA has taken it over from RICA, I don't know if it's improved. That would be one thing that I think should be improved. I believe the industry is really trying to present us as the professionals in the industry that we are, versus how people view realtors and us as used car salespeople kind of idea. Not that I want to put those in a bad category, but that's kind of, you know what I mean. I think the professionalism that we're developing is improving because so many bankers are realizing that's not where they should be and are coming into our world. And I think the professionalism that they bring, because one thing banks do very well is they train their people very, very well. And I mean, I know lots of bankers that have now just decided to come into the mortgage broker world because they're done with the banks. They're just tired of being there. Because you get to a point after so many years of working for them that your tolerance level becomes lower. So
it's interesting to watch how many have, and major producers, of course, right, leaving the banks for the broker world. And I think I always have a great example of one of the BMO reps that was in Fort McMurray when I was up there, about how much business they can do, but pay-wise, I won't name her name, but basically I did $42 million, she did 70, and she only made $1,000 more than I did.
Yep.
So twice the work almost, and not being paid for it the way that she could have been, right? So
yeah, and I mean, different individuals work at banks for their own personal reasons. So if you are feeling the need that you want to have benefits, that you want to be part of a team and somebody almost to kind of look after you, if you will, then being a mortgage broker wouldn't be what you want. Because in this world, you are entirely on your own, and it has to be self-motivation to get yourself going.
That's right, yeah.
Even as broker of record, the training that you do provide is very handy and very helpful, but it's not your job to motivate me. That's my job.
Well, if I've learned nothing over the 17 years of doing this, you can't motivate people. It's either they have the will to go out and to do this business, or to do any kind of business for that matter. And that's, when we're hiring, that's part of what we look for, people that have some kind of entrepreneurial background. Sales background is great. I have literally been on commission for the last 30 years. I haven't had a good salary paying job in that 30-year stretch. So it was either selling new homes, you name it, literally had sold nuts and bolts before that, and welding rod and things like that. So it's definitely, it's not something I can't teach motivation. I can talk about it all day long, but if you don't have that drive to get out and go chase business and make a business for yourself, because of CRM programs, that's actually what we're doing, right? Mm-hmm. In that you're going to build something that you don't have to chase eventually, which is kind of where I am, and a lot of other people on the team are at that point where it's it's coming in the door regardless, right? So it's always good to do. That kind of covered a lot of the differences, I think, between the two. Obviously, differences in the regulation, being under the Bank Act or being under the Real Estate Council of Alberta. I'm licensed in 6 provinces, so it's different in every province across the country. But it all comes back to that same thing, that we're doing real life mortgage solutions, and we're calling it that for a reason, because it is, and it's important to people that we do a good job, right? So,
yep.
Oh, Anyways, Mr. Meredith, I corrected the spelling of your name on the podcast here. So I thank you for your time this morning, and have a great rest of the day.
All right. Thank you, sir. Have a good one.
Thanks for listening today. I hope you found the information that we provided to be useful in your mortgage journey. And remember, you can always find our associates at www.brokersforlife.ca/associates. Have a great day.